Hi folks, welcome to this special video. Do read the disclaimer fully. Today we are going to talk about silver. Is this the beginning of a massive silver bull run, or perhaps it's the beginning of a different regime in the market? We'll talk a lot about this, the data of the last many decades, and comparisons with other asset classes. To start with, these are the stats from our last trending video. What you will see here is that about 49% people who regularly view our channel are not subscribed. So please subscribe to our channel as is our regular request. So what has happened in the silver market? Silver market has just broken out uh, very recently, perhaps just 4 days back. Silver had a 5.6% move in a single session. On US dollar terms, you can see $54 uh, was the previous high in October, and that after a decent correction with a cup and handle formation has broken out. What happened that day was a data center breakdown, cooling system failure at Cyrus 1, and the Chicago Mercantile Exchange, which is one of the bigger exchanges in the US, the Globex platform, went dark for approximately 10 hours. So for about 10 hours in a market which is 24 by 7 or at least 24 by 5, uh, there were no trades happening there, and the physical market disconnected versus the derivatives market, and this allowed the raw physical demand to set the price for the first time in many years. And this just in 1 hour you can see the kind of move that happened, uh, exactly where the breakout was. So 5.6% on a daily basis, and this was the strongest single session advance in more than 1 year. And since then, silver has climbed to higher highs. We are approximately at $59 as I record. So what changed after 28th of November is essentially very strong monthly closing. So this is the monthly chart of the last 2 decades, and we've closed the November month at the highest monthly close ever, which is a very strong sign for any chart that you have a 15-year high getting broken and the monthly close happens above that. If we go even longer than that, if we see the last 50 years of data, then silver has been a extremely difficult trade, to the extent that it flies rapidly during the bull market, but it also crashes. In 1970s, it went from virtually $1 or $2 to $48. Then in 2008, 9, it started to go up from around $5 to $7 to about $49.8 again, and then crashed again to 13 for $15. And now we have this huge rise above the $50 mark for the first time, that too over so many decades. So that's the overall makeup of the silver market. So the first, reaction or instinct could be that it will go up and come down, it will go up and come down, and that perhaps may happen again. But remember that we live in a very different world from where we were in the 1980s and the 2010s, and perhaps the last two times is not representative of what happens this time. Of course, nobody can really say what will be the outcome and when this rally will stop, but that's what we're trying to estimate right here. In a recent tweet from Gold Silver headquarters, uh, the channel noted that in the 1970s, a 10x move came, much more than 10x actually, depending upon where you see it started. But if you consider 1976 as your base, then a 10x move was there and everything was nullified after that. Then post 2003 4, another 10x move came, and that basically retraced about, you can say, from around $48 to about 13 or $14. So significant part of that move also was given up, and now for the first time we are breaking out of this double top over the last 50 years, and the move has just sort of started, you can say. So if $15 is the base here, and the silver normally moves 10x from its recent base, then perhaps $150 could be a potential of silver in the coming years. Now let's also look at some important ratios. This chart is showing you a gold to silver ratio, which is a reasonably followed ratio in the precious metals market, wherein the ratio currently is at 72. uh, Historically has been much below 50, and essentially the last two instances of the fall in 2009 and then 2020, the ratio has fallen about 50% each time, 60% to 50%. And you have the current instance somewhere in the middle right now. So if it does go towards a 50 to 60% kind of drop, we'll be at a gold silver ratio of 50, which is at 72 as of now. So another ratio that we could look at is the S&P 500 to silver monthly chart, again over the last 50, 60 years. And you can see that you have dramatic falls from the top in this ratio of S&P 500 to silver. Basically what is happening is that from time to time the equity market is becoming much more valued versus silver, and there are instances where silver pulls back and tries to come to a balance. So in the 70s the ratio fell about 95%. Then in 2001 to 2011 the ratio fell 90%, and we are currently in the midst of the fall that has started here. Perhaps we will go to 90% or not, we really can't say, but that's what the history tells us. If we look at the India context has not been as bad as the USD context, and primarily precious metals are good for non-USD domiciled investors because precious metals, especially gold, is an antidote to the US dollar. So if you are invested in currencies other than the US dollar, then gold and silver perhaps can help you as a hedge more than if you are invested in dollars only. So for Indian investors, the silver INR breakout happened somewhere near 1,63,000, and we reached 1,80,000 in the last few days. It's a big breakout, again a cup and handle formation, and it is looking very, very strong for the medium and long term. Now, however, the caution here is that in the last two times, silver in USD terms has fallen 90% in 29 months and 72% in 57 months. But as I mentioned, these two instances may not drive what goes forward. However, the gold to silver ratio, if we plot the gold to silver ratio of the last 50 plus years, you can see that there is a gradual, you know, uh, increase in this ratio. It's not really coming back to its traditional base. I mean, the base used to be around 15 in the 60s and 70s, and then perhaps near the 50s in the 2000 and 2010s. And maybe we are, going to a base of 65, which is not so far away for the silver in this decade. So as gold becomes more and more important in the monetary world, where central banks are accumulating gold, silver remains an industrial product. While we can talk about silver just like gold, but silver cannot really do what gold is doing unless there comes a time when central bankers are also accumulating silver as part of their reserves. That will be another story when and if that happens. So what can be the future drivers for this metal? One thing is for sure that there is unprecedented industrial demand for it. So convergence of green energy transition, especially solar, because silver gets used in the solar cells, and the AI revolution has created massive industrial appetite for silver. Uh, the structural supply deficit. So essentially, the market has been in deep deficit for the last four consecutive years. You can see in this chart from 21 onwards, the supply of silver has not been able to match, uh, the demand, and the stockpiles are going down. This is basically a structural issue, and it is estimated by several market watchers that this supply deficit forecast is only going to grow. So many million ounces of silver deficit is there in the supply. Inventories, or basically the demand, trends for silver are also forecasted to be going higher, and hence inventories are basically coming off. And the additional technical advantages are the bullish technicals, where a decisive psychological price level break above 50 has happened, and we are already at near the $59 mark. If we see the forecast from various analysts and firms, you can see, uh, some of the analysts' forecasts have already been crossed significantly. So this was in the beginning of the year. Some had predicted $40, $38, 38, 40, 52. Almost all these guys have been sort of negated in terms of much better price discovery. One firm, Investing Haven, has predicted $75 by 2027 and also predicted a peak price of $80 by 2030. But it seems the way things are going that all these forecasters may, get beaten in terms of the price targets that we finally achieve. So I will not be surprised if after reasonable breaks in the middle, silver actually goes to triple digits at some point. And usually this will happen that as and when there will be some very sharp spikes in silver, people will back off from the metal, thinking that enough has moved. But just see, we have come from the 30s to 59 in just a matter of a year. Silver is actually up 100% for this year. So perhaps we may get 3 months, 6 months of consolidation, and then we may get another 50%. So those kind of moves can always happen. So trying to trade silver in the short term is going to be very, very difficult. But if you are gradually allocating to silver, perhaps that can be a better way of riding this silver move. And of course, in Indian rupee terms, we also have the advantage that our rupee is depreciating. So these are some of the avenues through which we can have a non-INR denominated asset, which is globally priced. So just like gold, silver, long-term CAGR returns in INR have also been somewhere near 11 to 12%, which is just behind gold at about 13.5 to 14%. So silver has been a great compounder for INR investors. What are your thoughts on the silver's next move? Do let us know in the comments. And do you also believe that the bull run has just begun? Do join our community if you like. You can get more premium market insights. There's a link in the description. You can fill in the form, drop your email, and we'll get back to you. You can, of course, do give us a like or a share to this video if you like the content, and do subscribe to our channel as I requested earlier. Do watch these other content pieces from our channel, and I'll see you in the next one. Bye.